So guys, when you hear about the Fed rate, right? What is that? Everybody thinks it's just a 30-year fixed rate. It's not. The Fed rate is the Fed funds lends to the big banks and institutions. So what happens? The Fed lends to Bank of America at 4.5%. Bank of America then lends you on an equity line at 8.5% or 9%, but worse. They actually lend you back that 4.5% money that they get from the government for free on a credit card at 24%. So exactly what Rich said. Arbitrage is the difference between the Fed funds rate that the banks borrow at and what they lend you at. So did you ever notice? I mean, I know none of us ever want credit card debt, but I'll tell you the truth. There's been many times in my life where I've had credit card debt. Did you ever notice you get more offers when you have credit card debt? Like, why would they want to lend to me right now? I got 50 G's on a credit card. Why? Because they're making 24% on you, right? So this isn't to piss anybody off. This is to say we can break these patterns and we can manage our liability. See, financial planners want people with 100 grand, 200 grand, a million, 10 million, but it's how we manage our liabilities. It's how we pay our bills and the patterns that we set up in our life that dictate whether we're gonna have money or not, okay? I promise you, some of these slides are gonna aggravate you, but I'm gonna give you a solution that's gonna get you excited and fired up. So here's our cycle, right? 20, 25 years old, we buy a single family or condo. At 30 years old, we have a kid, we put a little bit of money in a 529 for college. At 35, we panic when the children are in high school, maybe 40, right? At 40 years old, 45 years old, we start borrowing money on student loans because our kids are in college. And at 50, 55, our kids graduate college and we're in our mid-50s and we either have student loan debt for them or they have student loan debt. So that sucks, right? I have 2 kids that are freshmen in college right now. It's not fun. One, the pricing's reasonable. One, it's completely unreasonable. And so we have to do something different, and I'm gonna help you do that. Speaking of student loans, did you know that 44 million Americans have student loan debt and the student loan crisis is $1.5 trillion? Here's a little tidbit for young people or people that still have student loan debt. Guys, when they tell you it's deferred, do you guys know what who knows what negative amortization is? Someone explain that to me?
You're not paying enough to cover the interest.
Yeah, so negative amortization became illegal in the mortgage world, guys, in 2008. What negative amortization is that you get a loan and you don't have to pay the payment or you have to pay a minimum payment and interest gets added to your balance. That is illegal on mortgages in America. Yet when the student loan companies allow you to not make your payments, those loans are negatively amortizing. We're adding to the balance, thinking we're getting a free lunch from the government, and we're not getting a free lunch. They want you to do that because all you're doing is making your balance bigger. So if you have student loans, get out of deferment and start paying it, okay? Start paying it. It's not gonna go away, it's just gonna get worse. I swear this will be positive soon. I'm just setting the stage. All right.